deviations and subtle variances in these specific themes. They won't look exactly like I'm outlining here, obviously. That's what makes trading somewhat difficult, because you have to look for similarities across the board. So they're going to have a great deal of similarity among many sell days, and the ideal scenarios will look very close to what I'm outlining here. But you start with the central bank dealers range, and for a classic or high probability London normal protraction sell day, the central bank dealers range is going to be less than 40 pips. Now, as soon as you see a central bank dealers range that's greater than 40 pips, this is not going to be that profile. So you'll have to either go to the next one we'll teach in this lesson, or you're just going to consider whether or not you're going to be trading London. The Asian session range between 8 o'clock and midnight New York time, we call that the Asian range. This is going to also have a classic range of 20 to 30 pips. If it's larger than that, again, this profile will not be existing.
More money in your pockets, safer communities here in Wisconsin, and government that works for working people. Check out my website to learn more about what we're doing for you in Washington. Paid for by official funds authorized by the House of Representatives.
Check this out. I'm going to show you how I afforded this car. Okay, you ready? All right, $118 for car insurance. That's how much I was paying, okay? I picked up the car a few months ago, and watch this. Ready? $97 premium, $20.
Typically, what you're going to see is the market will rally up after 12 a.m. New York time to 2 a.m. New York time. Now, think about what I'm explaining here. You're already looking for a bearish move. You're already bearish on the higher time frame. The daily's indicating lower prices. So what we're looking for is the London high to form. Classically, the high probability scenario for this profile to unfold is you have to see what time it is in New York at midnight, and then you're going to be seeing price immediately start trading up from that point. If it does not start trading up into 2 o'clock in the morning, New York time, that is not this profile. So right away you have a filter. You have the central bank dealers range has to be less than 40 pips, check. Asian range has to be 20, 30 pips, check. Now, if those two conditions are there, but yet we do not see price rallying after 12 a.m. New York time into 2 a.m., if that does not occur, again, that is not the London normal protractionary sell day. The protractionary stage, or Judas swing, will be 1 to 2 standard deviations of the central bank dealers range. Now let's recap what I just explained to you. The ideal scenario, the one I like to trade, the one that makes me sit on the sideline and wait for these specific criteria. Everyone wants to know when I'm trading in the course of this mentorship. Some of the days are ideal for these events right here. Then other days, there are instances where they're not so prevalent and the conditions were probably in our favor to trade, but you still can be wrong. So again, this helps you avoid the ugly periods, but you're still going to get these once in a while moves where it would have been better had you taken a trade. And all this is doing is help you know when the odds are less in your favor. And believe me, if you avoid this lesson, if you discount it, if you think, well, I'm just going to look for the signals, you're going to look for the signals in this kind of mess, and you're not going to see the results you're hoping for. And you're going to attribute to this stuff doesn't work, ICT doesn't have an edge, there's no benefit to knowing these types of things, and it's all fluff. Wrong. You've seen enough instances where precision is there. The precision won't come into the marketplace or be evident in price action when these elements are present. So I know what you're probably saying. Well, what's going on in the marketplace when these events are happening? What are the central banks doing? Ready for this? I don't know. I don't know. And if I don't know or have a belief in what they're doing, then that's certainly not a time where I'm going to put money at risk. And neither should it be for you. We know what they're doing, or most likely doing, when we have these narrow consolidation ranges between central bank dealers range and Asia range, when we have a daily bias, when we know where the draw is on the daily chart. Where is the price going to be drawn to? What is it going to be moving up to a premium, or is it going to be moving down to a discount? We know that for our directional bias. Having that, applying it to our London session, if we can find the standard normal protraction profile or the delayed profile in that direction of the day, we got it licked. But you still can have losses. If we see these conditions here, regardless of what we have as a daily bias, whatever we think IPTA is doing, it doesn't matter. All those things fall second to this criteria here because we're specifically dealing with intraday action. We have to have rule-based ideas. We have to have filters. These are our filters. You do not trade every single trading day. These conditions will prevent you from taking positions in London, and you have to accept it. You got to submit to it. You have to be subordinate to some level of rules. If you don't have them, you're going to overtrade. You're going to trade every single day, and yes, you might catch some amazing moves that may appear when these conditions are there, and you'll be able to show me in an email, I didn't do that, and I made 120 pips here, Michael, look at this. And I'm going to say, you didn't follow the rules. You're going to get mad, you're going to be offended, but I'm telling you up front, if it looks like this and you traded in London and you make money, I don't want to know about it because all you're doing is just saying you did not follow the rules.
I didn't think that Factor could help me reach my protein goals. Boy, was I wrong. Free high protein breakfast for a year? Yeah, that's real. Every meal's loaded, ready in minutes.
Okay, when is London open kill zone ideal? And we've talked about what makes the avoidance of the London session most apt to be the best choice. But what do we do to help formulate an ideal scenario going to London? Well, the daily chart's going to be clearly respecting PD arrays. So are we in an environment where the market's clearly respecting obvious, clear, non-ambiguous PD arrays, where the market just clearly is going to an order block or it's closing in a gap and it's responding as you would realistically expect it to? When we have those in here and find a high odds probability trade in my favor as a day trade, I'm just going to get in here and get lucky in London. That's gambling. We don't do that. So we have to have a discernible direction in the marketplace on the daily chart, and it has to be respecting a PD array matrix. In that way, we know what our daily bias is. Is it going to be reaching higher? Is it going to be reaching lower? It's just that simple. Now, when the market is poised to trade higher on the daily to a premium array, we're going to be looking for